Good morning, everyone, and welcome to Monday. Market's about to open. We're all getting excited, and today is the first time that I'm showing like Thumper's shopping list. So, one thing that you should know about me in my trading before we move on is I tend to target longer dated contracts that are about 30 to 45 days in length because I can't be that active and watch the trade every single minute of the day. I just can't have it up all day. So that's why I do target like 30 to 45 days. 45 is kind of my limit of where I'd rather just sit out and wait for a better entry point kind of thing. And so anyway, I spent a couple hours going through my list of tickers I like to play on, chopped it down to just a couple few strikes. You guys can look these over, see if they fit your profile. Maybe they'll give you an idea of something that you might want to make a play on. You don't have to do these strikes specifically. Do whatever works for you. Like you might do shorter dated contract, but closer to the money, that kind of stuff, or further from the money, make it safer. In this video, I want to go through some of these tickers or some of these plays I made and show you how they made my list. Maybe get like a inside look at how my mind works when evaluating the trades. So I'm going to start with the Microsoft 235. So the first thing I do on any trade is I pull up the chart. All right, and I usually look at the 1 year, 1 day. Don't let all these numbers like fool you and scare you away. Like it's pretty simple. Down here, if you see like the red icon, that's when an earnings play happened. If you hover over it, you can see how they did. Green icons down here are just dividend dates. One thing I look for is to see if there's another earnings date coming up. I don't like my contracts being in that range. So as you can see, Microsoft, we just had earnings, so we're good. Another thing I look at is the volume profile. And that shows like these blue bars over here. It just kind of shows where the action is on that ticker. Like if the price goes down to this range, like how much action is there going to be before it like gets down to the lower level. Where you see like a little spike here tends to be your levels of support. And as you look at this, across the line here, you can see like there's a lot of action here. A lot of action happened around this area. And then these red lines are just my Fibonacci's. If you draw those well, you can kind of see that they tend to jump off of like these lines quite a bit. So actually this Microsoft one looks pretty good from here, which is kind of nice. Let me get back to that outer view real quick on your 1 day. Yeah, we'll switch over here. I also like to look at some different time lengths. One of my favorite ones is like the 180 day, 4 hour. Just kind of see that price action. A little less crazy stuff going on, but you can see if your fibs are good. And you can see over here, like there's, even though like it didn't spend much time here, like there was a bit of volume at the 240 spot. I think I said my strike was 235, didn't I? Yes. So you can see like if Microsoft continues to drop down after earnings, like it's going to find some support in like the 240 range. So I'm not even going to like be worried about this position until after it hits that. And even then, the next kind of area of support is like 235. If we want to jump it down to the 5 day, 5 minute range, I like to look at this because it gives you kind of a view of like how the price action happens recently for like the daily. So I like to hover like the high point of the day and then look at like the low point. You can see like $4 move in either direction there. Here we have about, what is that, $6 move. So if Microsoft drops like $6 in a day, like that's not going to be alarming to me because that's kind of like how much you expect it to move throughout the day. That's just something else that I look at when I'm putting on these things. All right, so we've looked at those couple of charts. We decided 235 is good. Then what I like to do is go to trading, the option chains, and I look at a month out. Might help if I actually had the right ticker in here. Microsoft. And make sure I'm choosing the same one that I put in here, 611. So June 11. So 40 days. This be longer even for me. And one thing that I really love having on Thinkorswim here is the probability of the money. I think you could be successful if you just work off of this, but it doesn't take long to look at a chart and use that to benefit you and put the edge ever so slightly more in your favor. So whereas if I'm looking at probability of money and I was just doing that straight up by itself, I might be trading more at like the 90% range. And you see like the spreads there, you might get like an 80 cent fill on this if you were to do like the 220. $80 risking 22,000. Not a great return, but I mean they'd be safe. But because I look at the chart and I feel more confident that I could be closer to the money, 235, I'm fine with dropping my probability of the money down to about this range. And I think we got a decent return here. Almost a 1%, like monthly weighted average about. So that's the Microsoft play I have. In the event that this goes south, as you saw from the chart, it's going to find support around 230. So rolling down to the 230 range should be pretty easy. And it would be tough for it to break down below that, but I mean, it could. But it seems like a pretty safe play to me. If you want to be safer, obviously just move away from the money a little further. Like you make less premium, but you get safer, less likely to have to manage the trade if it goes down. Let's go over another one. I wanted to look at Zoom. So Zoom, I did the 260, 621. That's kind of a far one, but pull these up real quick. So Zoom is one that I've been playing quite a bit recently. Like they've moved up a lot due to the pandemic, a lot of growth, and like their all-time high was like, what is it, 588 here. This is a 1 year, 1 day. Yep. So like they had a spike like that was crazy. I don't think they're going to see these levels again because that pandemic plays down and there's not going to be more growth coming up. So anyway, get back to this. As you can see, this one's more of like a fib trade. It's been trading in this range for quite some time. Bouncing off like this 310 area. Moving back up to 320. You see it move up to like 330 and come back down. It's been about the range I've been playing in for a while. Switch this to the 180 day. Zoom in here. So since like the pandemic play is kind of done with it, I want to move more conservative and get a little lower. So the next level of support, if it does drop through this like 310 area, might be like 380 here. That's just where it's on price action. Not sure actually where that volume is coming from. I'm looking at the chart here, but that might be the next point that it will bounce up. Maybe it'll get caught on this like 270 area. So that's kind of why I'm going like 270 now in Zoom. I think it might start heading back down. The pandemic hype is gone and the growth factor there. Like they already have their new customers. They've established themselves as like a primary company now, but like, the growth is not going to be there. I think it's a little overvalued. So another thing that you might want to do or consider with the Zoom play is if you do put on this Zoom play, you could sell a call against it too. And if you do that, it won't require any additional margin because your broker should recognize that you can't lose both sides of the trade. Now, if I were to set up the call side, I don't like doing naked calls, so I would do like more of a spread. First thing I'd be looking at is where is their all-time high in like the last year, so 588. So I'd want to be like above that. Like it would have to double in value just about to get to there. So let's go over here. $621. I gotta fix those dates on that spreadsheet. It was actually June 11th that I put. Let's switch this to the call side. Now take a look. Oh, they only go up to 480. I wouldn't probably want to do that actually. Looks like looking at the bid and the ask, big spread, crazy stuff. Doesn't look like you get any action unless you're sitting in like the 420 range. So never mind. I'll pass on setting up the call side. But if I were to do that, what I would do would be to buy in that further out of the money put or call, and like the 430 strike. Let's say you can get this at 245. I doubt that. Actually, that's the ask. You could get it at 245, and then sell the 425 for hopefully more, and then your max loss on this would be 500 because it's $5 difference. But you pick up a small credit. It's tough to see because like this isn't live data, So it's tough to estimate the price, especially when we're this far out of the money. But if you want to sell the call side, like that's where I would be going, like past all-time highs. I think that might be a safe play. Go back here. I want to talk about the KR. So 611, 32.5. So this is kind of one that I doubt you'll be able to get a fill on, but if you could, I think that's a pretty safe, awesome play. So 32.5, you can see that like a pretty big spread here. So this is one of those, I might put the order in as a limit order. If it gets filled, great. If not, I mean, tough. Like it'd be nice to have like that area. I wouldn't really want to go closer than 32.5 when I was looking at the charts, especially if you're trading this far out. If you're trading shorter length, you might be able to go closer than money, but you can see like the prices compared to the price, you're just not getting a huge return unless you're sitting really close, even under 70%. That's scary. Okay. Another one I wanted to show you guys was RK. I don't usually play too many ETFs, but if you just look at the here one day, you can see like I chose the 110 strike, and you can just see like it's been trading like above 110 for a long time, so it seems like a safe spot. If it does dip below this 110, you see a little spike of volume here at like the 103 mark. So you should be able to manage by that point in your trade if need be. And then head back here. I actually put 2 up here, so 528. So that's actually a shorter one of mine on the list. So this is just me saying I'm looking at 2 different strikes here. Like the difference in probability of the money, like 10%. I might give up the extra premium for 110, go a little safer at the 105 strike. Just you know, like your preference. If I can make it safer and not have to worry about this trade at all, and actually get over 1% return for the month, I'll probably do that. So RK is actually what I might put on. Go back to this spreadsheet, and let me explain like what's going on here. So over here is the play. I need to update these dates. These are supposed to be 611s. And so that's the ticker, the date, and the strike. Here is like my estimated premium, like what it would fill. Since we're out of market, you have to do your best guess to see what it's going to be. And it's usually some place between the bid and the mid and the ask is where I would kind of guess. I am fine with putting up a couple limit orders, and if they fill, great. If not, I'm fine with it not filling. Like I don't need to be in every position that I research. Probability of the money at the time that I was looking at the trade on Thinkorswim, so that's up there for you. Margin requirement. That's a margin requirement that Interactive Brokers shows. Quantity is what I'd be looking at if I end up putting them on for myself. If you make a copy of the spreadsheet, you can change these out to whatever contracts you would end up doing if you wanted to do similar ones. The 1 month return is just the strike price divided by, or premium received divided by strike price, kind of weighted by about, trying to time weight it about for like 1 month. Like it's not perfect calculations here, but they're close enough for what I needed to do. Over here, it just totals up. So if you were to do all these contracts, you'd use 20K of your margin maintenance power. I'd be looking to deploy like 10K next week based on my portfolio. If you have 20K worth of buying power, maybe these are plays for you. You can see how much you'd make if all these expired at 0. Like all that just calculates out. One little limit there is Netflix tends to have days where it drops like $10 in the morning. If it does, that'll be the time that you want to like kind of sell a contract right there, get that inflated premium, and by the end of the day, it might be back up $10. So you might be able to close it in 1 day for like a 20% gain. So just see if Netflix dips and gives you that opportunity. So that's kind of like I guess you'd call it a scalp or day trade play. But again, Netflix, I want to get a little safer down to the 470 range. I think that pretty much wraps this up. This video probably went a lot longer than I wanted it to. Over here, I'm just going to put the Discord link to Randy's server. If you don't know, it's a Discord server where a lot of YouTube creators that are into options and like really like show their entire hand are there. Like they're there helping you learn, get involved, join there, ask questions. A lot of knowledgeable, smart people in there to take advantage of. And then I'm just gonna put like the YouTube link of this video here, just so you can always click back and look at this to review if you need to. All right, and if you like this, I guess thumbs up, subscribe, and then here comes that fancy disclaimer. I am not a financial advisor. Any information included in this video is for informational and entertainment purposes only. It is not intended to be investment advice. Please seek a licensed professional for investment, tax, or legal advice.